Hey everybody and welcome back to another video. This is How to Invest, Spencer here, and this one is going to be on Playboy Group. We had a brief hiatus from this stock. I don't think I posted on it for just over 3 months, maybe 4, but it has fallen quite substantially. If we look at the chart here, it peaked around May. It went just over $60, doesn't quite show it on this chart here, and has fallen over 50% back down to $28 here today. We'll look at the intraday. It was just under $27 at $27.50, and it is nearing breaking that $1 billion market cap. So it's getting more and more attractive if you're looking to be a long-term holder of the stock. Some of the statistics I wanted to get into this video. If we look at the PE ratio, they currently have just under 200 for a PE, which is 10x what a valuable or reasonable price to earnings ratio would be for most companies that are in the S&P or and the NASDAQ currently. But if you look just over 3 months ago, maybe 4 now, it was a 70, which still is very, very high, but is considerably more reasonable than almost 200. And so as this continues to update and they release their earnings for the second quarter of 2021, this will go down as I believe that a lot of their revenue will increase from quarter over quarter. We will look at the PEG ratio, which is price to earnings growth ratio. Sorry, it is a 7.5, which is very, very high. This is just measuring how much earnings is priced into the stock, and this is high for even any high growth company. If you go ahead and take an example of another high growth company such as Tesla, their PEG ratio is 4, so this is almost double them. So this company has a lot of growth priced into their stock price currently. If we look at some of the highlights from their last quarter, which was the first quarter of 2021, they had a profit margin of -5% and then a total operating margin of 10%. So they have very slim margins, and they lost money on their equity. So there's their investments, and they had a slight return on their assets. Their revenue, they generated $158 million in a quarter. So if you times that out by 4, it's just under, or just about $750 million per the year. Year-over-year growth is 34%, and that is looking back over the quarantine. So the first quarter did price in about a month and a half or maybe 2 months of the quarantine from last year, considering it was kind of in that February-March range. And if we look at their balance sheet, they have $70 million on hand, which if you look at their market capitalization is just under 1% or 10%, which can seem pretty low, but they don't have very much debt either, so they could pay down just about half of their debt with all the cash on hand. And since they're generating all of this revenue each and every quarter, they would easily be able to pay down all of their debts. And if anything, they could actually take out a lot more debt if they wanted to really reinvest into their company. Some interesting things here on the share statistics. If we look here, there is almost 70% held by institutions and big money, which is always a positive sign in my opinion, just because big money is really in the long run what moves a stock. And if you already have a position in a certain stock, you're more likely to add to it in a dip rather than selling out. And then also it has quite a high short percent. So almost 15%. If this continues to drop any lower, we could see kind of a rubber band effect where it gets stretched down so low, and then at a certain point the shorts have to cover, and they'll buy down at a very, very low period and then artificially shoot the stock up in the short term. So that was kind of my short-term analysis on the statistics and kind of the numbers of the company. I did want to get into a more technical analysis too. So if we look here at the chart, this is the 4-hour interval candles, and this is from when they merged with Atlas Crest Acquisition Corp, AC I forget what the pre-SPAC merger company was called, but this is just about when they merged. So we can see here in February they were a $10 stock, and they shot all the way up to 60 within 2 months in April, beginning of May, and then has come down 50%. If we look here, the 4 lines that are tracing the candles are the 5, 10, 25, and 50-day moving averages. As we look here, it really started to shoot up once it crossed all 4 of these moving averages. We can see here it exploded and almost doubled up to 20. Well, it did double from 10, and then went back down, broke the moving averages, and then broke the moving averages again, shot up and doubled again, went all the way up to 30 from 15, and then broke down, crossed the 25 moving day average, bounced right off of there, and then almost doubled again from 25 to almost 50. Dropped back down, cooled off, bounced off the 50-day moving average, and then shot all the way up to 55, bounced down, broke the 25-day moving average, almost hit the 50-day moving average, bounced up, hit 60, and then has since fallen and been kind of range bound and on a downward trend. If we look and take a closer look at the moving averages here, we can see that it is currently under each and every moving average and is kind of bouncing off the 5-day on a downward trend. You can see here there's a huge red candle right at 7:14 at 8 in the morning, and then has been bouncing off the 5 and the 10-day moving average. So what this chart is indicating to me is that there is not too much. We could try and pull this up. There we go. There's not too much support levels for the stock. So we can see here, if we trace this back to April, there is some support here in the 28 to 29 range, and then it falls all the way down to 25, and there's very, very little support. So it could fall very quickly to 25 in the next coming days if we continue to see weakness in the big indices like we saw today. Due to fear of the Delta variant and just other interest rates shenanigans and bonds. But once we pass the 25, it is where it gets really interesting. So if we don't bounce off the 25 or start to see some support and resistance at the 25 level, then it could fall all the way back into under the 20 level, which would be very, very attractive buying levels, in my opinion. If this falls to 25, it's not really too interesting for me, just because I've already made a substantial amount of money off of this, and I think that a lot of the move that it did make when I was holding wasn't based off the fundamentals of the company. I think a lot of it was just internet driven. I saw a huge increase in the amount of posts on each and every brokerage account from when I started investing until when it peaked, and has since gone back down to the lower levels of around here, where barely anybody is talking about this on message boards online. And there's just really bad overall sentiment on the stock. So I think this stock will continue to fall. It just seems how much it will fall is the question. If it does fall to the 20 range, I will be interested in maybe buying back again. But if it bounces off the 25 level support, or even just bounces up from the 28 or 27 that it hit today, I'm just going to let it go. Not too interesting to me. So if it does hit those levels, I will make another video and update you guys. But if not, thank you very much for watching this long, and have a great day.